Welcome to My Money Mindset podcast, where we explore how a healthy mindset is the foundation for financial success. Each week, we delve into mindset hacks and practical strategies to help you enhance your income, help you make more appropriate investments for yourself, and to improve your overall financial well-being. Join us on this journey to transform your financial future by transforming your mindset. Please note that the information provided on this podcast is for general information purposes only and does not constitute as personal, financial or health advice. It has been prepared without considering your individual objectives, financial situation or life needs. Before making any financial or health decisions, you should consult with a qualified professional or financial advisor to ensure the information aligns with your specific circumstances. So let's begin and enjoy this journey as each episode teaches us on how to improve our overall mindset that overall improves our financial success. Hello everyone and welcome to another episode of Money Mindset. In this episode I want to go over a few certain things in relation to bridging loans and how they can sort of be favourable for a lot of people that are looking to sort of sell their owner-occupied home. So they're living where they're living at the moment and buy a new one or upsize or downsize or enhancement, whatever that may be, and obviously trying to cover both. So in the event that you don't sell your own property before you buy something, a bridging loan may be a convenient way of going about actually buying something and having the time to sell your property, move into the next one, and then obviously sell your older one. So a bridging loan, this is more or less in Australia, it's a short-term loan designed to help obviously the homeowners purchase a new property before they sell their existing one, and it's sort of, that's where the term bridging comes from. It bridges the financial gap between these two transactions. So I just sort of go through the pros and cons, and I jotted down a few different things, but pretty much the pros. I'll go over the pros. So we tick off why we would consider a bridging loan, and that would be simply because you're going to buy before you sell your property. So you're currently living in your property, then you buy another property and you're bridging the move or the loan type of thing. So your bank or banks are coming to the party and saying, look, we'll refinance the owner occupied and we will give you a pre-approval for the new one and pass the money for the new one, and then you put your property on the market. You sell your property after you've moved out of it, of course, and you're living in your new one. The advantage of this is the ability to purchase, your new home or your desired one. You're not sort of trying to time everything in accordance, so move out on the same day and then move in the same day type of thing, which what they can often a lot of people want to do, simply because, and I'll go through how bridging loans can sometimes be a little bit more expensive, but some people do what they call a simultaneous settlement on the day they move out. They sell their property, the money transaction goes through, and then they actually buy the property. So it does happen quite a bit. So they don't want to go for the bridging loan. I'll explain in the cons, the reasons in the cons later in the episode. So realistically, it's especially beneficial in a competitive market where you don't sort of miss out on opportunities, right? So you're ready to jump, you get a pre-approval on a bridging loan and you're ready to jump, but it means that you don't have to move out, right? So and it makes you avoid any temporary accommodation, as in short-term stays, Airbnbs, that sort of stuff. Or some people actually can often find that they will rent for 6 months, so sell their property, rent for 6 to 12 months, and then buy another one type of thing. So you can move directly from your old house back into your new one, avoiding any inconvenience and costs of renting or storage and multiple moves and stuff like that, right? So you can also negotiate a better selling price because it gives you that time. So with more time to sell, you're not forced to accept a lower offer on your existing property, and you can wait for the right buyer and potentially achieve a better sale price. So a lot of the time people have this nervousness about selling their property in a hurry simply because the anxiety that's created when you've got to move into your new one, and then thinking, well, if no one buys our place, what are we going to do? We're going to be stuck with 2 loans, and which does happen, by the way. So, a lot of people can often make the mistake where they go, oh, look, we'll sell our property quite easy, but in the event that they don't, they're stuck with 2 properties and 2 mortgages, right? So double trouble. So it does enable, a bridging loan does enable you to negotiate a better selling price, and it's sort of convenient. It's very flexible. Bridging loans offer flexibility in terms of timing, and it can ease the stress of coordinating settlement dates, as what I was saying. So, which sort of leads me to being able to capitalise on market growth. And what I mean by that, if it gives you that time or that certain time, bridging loans can go from 3 months, 6 months, 12 months with certain lenders. If property prices actually, or the values are rising in a market, you might find it's up. You can secure your home at today's price, let's say, while your existing property may increase in value before you sell. So if you have your owner-occupied property now, you buy before the market starts to move, as in goes higher, then you might be buying your property at a really good price, and the market's starting to move forward. So you've got 2 properties that are actually rising in values slowly, but eventually, whilst you are selling it, and you might get a better price that way. Now, the other thing to be aware of, and this is what you'd want to ask your broker to have a look at, is that some lenders offer the interest capitalization, meaning that you don't have to make repayments during the bridging period, right? So the interest is actually added into the loan balance and paid upon the sale of your existing property. Or so you sell, you get a loan that's capitalized. So they basically say, right, if you're selling for $1 million, and we will capitalize the interest for 12 months, being somewhat, let's say, 60 or 50 odd thousand, they will add that into the loan, so the payout figure will be $1,050,000 plus costs and stuff like that, right? But that's in simpleton terms. So some lenders do that. So always make sure you do speak to your broker and ask, is this possible? Are we able to achieve that? It's sort of fast. Look, bridging loans are a fast way to access funds, right? So they, compared to traditional loans, bridging loans can often be arranged relatively fast, and it allows you to act fast when you want to find the right property. But like I said, these are the pros with the bridging loans, and that sounds really good, but there are also some cons when it comes to bridging loans. And quite often, the first one is always that they're generally higher in interest rate. So typically bridging loans have a higher interest rate than a standard loan due to the short-term nature and perceived higher risk for the lenders. And interest is often calculated daily, right, with banks, which can add up quite quick. So what that means is basically you do have 2 properties that have a mortgage on them, and obviously when bridging loans are calculated, their interest rates are a little bit accommodating more for a higher risk. So their interest rates are generally a little bit higher and can cost you more. These loans sort of, and like I was saying before, they only go between 6 to 12 months sort of thing. It's very, very generally, I haven't seen too many bridging loans for 3 months type of thing, although it can happen, but generally they're between 6 to 12 months, and that's when in that short term or period of time you need to be able to sell, right? So failure to sell or can lead to penalties from the lender, forcing a sale, potentially lowering a price and desired. So before I was saying how if you're in the market longer and it's an uprising market, you'll find that you may be able to sell your property that you're moving out of for a little bit higher price. But then the risk of this is, let's say the market doesn't rise, or it's stabilizing where it is, or it could be dropping. You do have the risk of being able to get faced with penalty interests and costs, and it can cost a hell of a lot of money for that. So and like I said, when property prices are falling, during the bridging period, you might sell your existing home for less than expected, potentially leaving you with a larger debt. So really be aware of that. I've done a lot of loans where this has occurred, especially recently when there was a downturn and inflation was going through the roof and the interest rates were hiking. A lot of people did get caught up with this and price values did drop. And in accordance, when they did do the sums, they were caught out in that regard. So the other thing also to remember is with bridging loans that you've got to manage two loans, right? So during the bridging period, you'll be responsible for repayments on both of the existing mortgages. So you're obviously your new purchase loan and the one that you're still moving out of, or you still are selling that loan as well. So, and that sort of increases financial burden, right? Anxiety starts kicking in, that sort of stuff. Even with interest capitalisation, the total debt increases. So capitalisation of interest is popular because it sort of relieves your mind of knowing, oh, I don't have to pay that interest. But remember, capitalised interest just means that you're paying it when you do sell, or eventually when you sell, and you're just scraping it off there. It just means that you don't have to pay it during that period. Now, the other thing too, also, eligibility for a bridging loan, which I wanted to touch on, was because not everyone sort of qualifies for a bridging loan, simply because banks often assess factors like your credit score, your income stability, equity in your home is a big one, and the marketability of a property. So if you've got a very unique property and the value is skyrocketed, it could be, $3-4 million, but in the bank size, that's considered sometimes high volatility in a sense, depending on where that property is located. So don't always think that, if you've got a fantastic house and it's going to sell tomorrow and you're going to get the price you want, that banks often quite err on the side of caution when it comes to values and stuff like that, and securities. So you just want to make sure you speak with your broker there as well. And don't forget that these bridging loans, they obviously have additional fees and costs. You may encounter various fees, including application fees, valuation fees, obviously potentially for both properties, legal fees, increasing overall cost for the loan. But that being said, these costs are within moving properties as well. So don't think that these costs are any more astronomical than that if you were just to simply sell your property and do a simultaneous settlement, as I mentioned before. So costs and fees are always relatively there. It's more so the strategy that you use when you are considering a bridging loan, right? So, and which always leads me to the conversation of making sure that your financial strain or your ability for being risk adverse is there. So if your property does take longer to sell than anticipated, you're accumulating interest and repayments, and the pressure to repay the loan within the term can cause significant financial stress. So you want to be really aware of that, right? So make sure nothing in life is worth, ruining your health over type of thing. So, but what you'd want to do if you are considering a bridging loan is the important considerations is have a realistic sale price expectation. So obviously get some professional valuations of your current property and be realistic about the selling price and time frame. Nothing worse than people over contemplating from what they think that their property is worth. They think it's worth $1 million, and in actual fact market is reading 900. You're 100 grand short. Speak to a lot of your real estate agents, the reputable ones, the ones that are guns in the area, and they're really honest with their opinion. Speak to a lot of brokers or property sort of mentors, stuff like that, people that are in your neck of the woods and they do know about your suburbs and stuff like that. It's really important. Understand that all the costs when it comes to bridging loan, and that's moving property as well, like in conventional loans, that all the costs involved, like factor in interest rates, your fees, potential penalties, so make sure you've got a bit of a float there, a bit of surplus cash to cover for that, and have a backup plan. Consider what would you do if your property doesn't sell with the loan term. Always make sure that you do have a backup plan. A lot of people being caught out this way, and there's nothing worse than trying to create a backup plan when you've got a lot of financial stress. And obviously, the last but not least is always to seek professional advice, right? So consult your mortgage broker, accountants, financial advisors determine if a bridging loan is going to be the right option for your specific circumstance. It's very important. Like I said, there's a lot of moving factors here, as in suburbs, as in your income. There's so many what we've just covered, and you really should be speaking to someone, a real savvy broker or accountant or anyone in your financial world, to make sure that you can do this and get quite a few opinions in that, and go over the figures once, twice, thrice. Do it as much as possible and make sure that you're covered. But I suppose, look, at the end of the day, bridging loans, they can be a valuable tool, right? And they're valuable because they sort of enable you to sort of navigate the complexities of buying and selling your property simultaneously. So it sort of helps in that regard. But it is, like I said, crucial to sort of carefully weigh out the pros and cons that we just mentioned, and understand that their associated risks and costs before even proceeding to a bridging loan. It does sound fantastic. A lot of bridging loans do work well for some people, but sometimes they can sort of lead to increased costs and a lot of stress. So hope this episode does help out. It's a bit of a short one, but a very concise one. I do believe that bridging loans are a great tool to be able to be considered if you are moving from your home. And let me know if this helps, and see you on the next episode, guys. Thank you.